rates. Give us the update. Again, lots of change. People react one way or another to change. Markets are reacting. What's this mean for the long-term rates, 30-year fixed rates?
This was an interesting week because it really illustrated how complex the financial markets are and how many different factors affect the financial markets. And it's really tempting, in the news or when you're talking about, how one thing impacts rates to say like, oh, this makes rates better, this makes rates worse. But it's just never that simple. And this week was really an illustration of that. Well, and I'll tell you why. So tariffs are having a big impact in how people perceive the economy is going to be as a result of tariffs. To your point, the White House can say there's going to be tariffs and then say there's not going to be tariffs the next day later, and that happens. So there's definitely a certain amount of uncertainty that comes with that. But for example, this week the CPI numbers came out, which is the numbers about inflation. And prior to the election, our conversations about our rates going up and down were pretty simple last year. They were pretty much based on what's going on with inflation. Is it getting better or worse? And that was
until the end of the year, but yes.
Yeah, at the beginning of the year, or even at the beginning of the year. Yeah, it changed a little bit at the end of the year. But this was interesting. So the CPI number came out, and inflation got better, which is good news. The CPI increased 2.8% over the prior year, which was better than expected and better than the previous month. So in theory, like you'd think, okay, if that's good news about inflation, mortgage rates should go down. And yet they didn't. They actually went up. And so I'm like scratching my head. I'm like, what is going on here? And so part of what's happened and part of the reason rates got better a few weeks ago, we were talking on the show a couple weeks ago about consumer sentiment. People were not feeling confident in the economy. They weren't feeling confident in the labor market and their ability to have a job. And people just weren't feeling good about the economy. And so this kind of changed things too, because the investors who buy stocks were the stock market went down, I think the previous week a bit on some days. Some days it goes up, some days it goes down. But some of these concerns about tariffs slowing down the economy has caused people to be less likely to buy stocks or concerned about stocks because of the future of the economy.
In fact, investors have been moving money. There's, there has been an increase in investors moving money from the equity market, stocks, into bonds.
Correct.
So that has happened over the last couple of weeks.
And that's the reason rates right now are pretty close to the lowest they've been in about 4 months, and they're lower than they were a month ago because investors were worried about the economy. They're buying bonds. That made mortgage rates go down over the last couple of weeks. But the interesting thing about the CPI report on Wednesday is inflation went down, which should be good news for mortgage rates because it means the Fed is more likely to cut rates when inflation goes down. Also, there was concerns about the recession potentially. We're not in a recession, but there's concerns it could be one.
You're hearing that. You're seeing that word in headlines
starting
a lot,
starting to come up again, and part of it's related to the tariffs. So what happened is when inflation numbers came out and it improved, all of those investors that have billions of dollars to invest every day, on Wednesday, they felt better about buying stocks. They had been worried about buying stocks for 2 weeks, and they'd been buying bonds. And all of a sudden, they're like, oh, maybe the economy is better than we thought it was. Maybe, the light looks better at the end of the tunnel. And so that day, when that news came out, the news that should make rates go down because inflation went down, a whole bunch of investors said, all right, yay, let's go buy stocks again. Things are looking good. That actually made the rates go up that day. So at the end of the week, the mortgage rates are about the same as they were last week. So you have like all these conflicting things that push in different directions. Stuff that should be good news for one thing is sometimes bad news for something else. And it's just pretty complicated, but it's kind of like canceling itself out. It's good and bad. And at the end of the day, the rates stayed about the same. So that's my weekly wrap up.
The conflict is creating a lot of confusion, but there's opportunity.